Hello, I'm Kamal Santamaria. This is Counting the Cost on Al Jazeera, our weekly look at the world of business and finance. This week, just what will it take to truly rescue Europe? Less than 2 years now since Lehman's collapsed and sent world markets into a tailspin. What's really changed, and is another meltdown on the cards now in Europe? Also Thailand after the Battle of Bangkok. What's the future for Thailand's battered economy and reputation? And billionaire, entrepreneur, not to mention jet ski rider, we find out what makes Virgin's Sir Richard Branson tick. So more turbulence for the euro. Every time we think there's a bend in the road, perhaps a turn for the better, we just seem to find another downhill run. The currency itself has sunk to 4-year lows, and there are record numbers of bets that the euro will continue to slide. According to banking giant BNP Paribas, it could even hit parity next year, a euro for a dollar. So why won't the slide stop? Well, eurozone debt doesn't just disappear overnight, so that's still causing concern. And that $1 trillion plan to save the euro, it's just that really, a plan, until it's actually voted through eurozone national parliaments. But there is a fight back of sorts. Germany went on the charge against speculators, and leading the fight was Chancellor Angela Merkel herself, though first there had to be something of an admission.
This is a challenge to our very existence, and I must add, we have to prevail. If the euro fails, Europe fails. But if we avert this danger, the euro and Europe will come out stronger than before.
But now we see Germany, in a unilateral move, banning the practice of naked short selling. Sounds a little edgy, but it is in fact the process of betting that a stock or bonds or indeed a currency like the euro will actually fall. There was some flack for the move not being a coordinated European one, but Europe as a whole did home in on the hedge fund industry, swamping it with new regulations. It's a move not really welcome in the UK, which gets $7.7 billion in tax revenues a year from those very hedge funds. With more on all that, Tanya Page.
The people who run hedge funds are based here, the suburbs of Mayfair and Knightsbridge. They're London's most affluent areas. It's far away from the high-rise buildings, but also the high profiles of the city's mainstream financial districts. It's an area where Rolls-Royces and Bentleys don't look out of place. While the hedge funds have maintained a relatively low profile, soon they'll have to get used to tough new rules.
Europe's finance ministers are finally delivering on a threat they've been making for months to get tough on the hedge funds they blame, along with the banks, for much of the financial instability facing the continent. Many see them as the bad boys of business, often making money when things go wrong for others. For example, betting that countries like Greece won't be able to repay their debts, and targeting businesses that are struggling to sell off their assets for a big profit. But with 80% of European hedge funds based in Britain, it's understandable the UK government objects to stricter regulation. Britain has been resisting the toughest proposals, but after only a week in the job, it would appear the country's new finance ministers found himself having to reluctantly toe the European line.
Now, while we're talking Europe, remember Greece. Well, the fears of contagion from Greece's debt woes are also driving investors away from the euro, a currency which some thought could even rival the dollar one day. Barnaby Phillips asked Greece's Prime Minister George Papandreou about fears that Greece might eventually default on all that debt.
Well, first of all, on the skepticism of whether we can make the changes, I think that's a normal, healthy skepticism, because yes, Greece did have a credibility gap, but that's exactly what we're changing in Greece. And the fact that we've taken these emergency measures has shown our determination and our will. And I would say they do hurt, and I very much understand the protests. But at the same time, I think people are determined, because of the pain, to say never again. Let's really make these changes. Let's make Greece a viable economy and a competitive economy.
And that interview in its entirety with the Greek Prime Minister George Papandreou will be on a coming edition of Talk to Al Jazeera. Keep an eye out for that one. Right, time for some cool heads and analysis now. Let's go to Sam Al-Shahat in London for her take on things.
Thanks, Kamal. With me in the studio are Stephen Lewis, he's the Chief Economist at Monument Securities Limited, and Kostas Lapavitsas, who's Professor of Economics at SOAS, University of London. Gentlemen, thank you so much for coming in. Stephen, let me start with you. What do you think of Germany going it alone against short selling and in fact not even informing the European Central Bank or any of its other European partners that it will do this?
Well, this illustrates how, when the chips are down, national interests trump all other considerations. And I think that is how the move has been interpreted widely in financial markets. The results of the action have therefore been quite different from those that the German government anticipated, and there has now been a lot more worry in the markets as a result of this move, and they've not calmed down as Mrs. Merkel and her colleagues might have hoped.
I mean, it's a very good point, because, I mean, right now what we're seeing is that many in Europe are blaming speculators, they're blaming hedge funds. Are these guys really responsible for the euro crisis, Kostas?
Well, I'd be the last person who would argue against regulation of the financial system or trying to cage speculators in. I think that we are in this situation because of the actions of the financial system in good measure during the last several years, and regulation is in urgent need. However, to say that the current predicament of the eurozone is because of speculators is, of course, to miss the wood for the trees.
Then who's ultimately responsible for this crisis?
I think the problem is that the original construction of the euro system didn't take account of the wide divergences in potential economic performance of the member states. And it took a while for this to become clear, but now it is very clear, and that is why the system is beginning to break down. And the problem which the policymakers now face is how to restore confidence in a system which patently cannot work.
So, Kostas, how do you think they can restore confidence to the system? What could they do to encourage investors to invest again in the euro?
You see, the problem in the eurozone, in my opinion, starts from underlying imbalances, and these imbalances have to do with the way competitiveness has evolved, and therefore the way economies have evolved themselves over the last 10 years. What we've observed is that competitiveness of southern economies, what we might call peripheral economies more broadly, has declined, and this has to do with the policies that primarily Germany and other countries of the centre have followed towards their own workers. They've been keeping wages extremely low in those countries of the centre, and that has allowed them to move ahead in competitiveness. Therefore, something needs to be done at the centre. Some policies which will allow for a rebalancing of competitiveness and a revival of demand at the centre, domestic demand, that would allow for greater rebalancing of the economies across the board.
Okay, let me take that point. I mean, a revival of demand from the centre, that would mean a demand from the German workers, raising their wages possibly. Would Germany be ready to suddenly become more of an importer and less of an exporter?
I think the problem with raising German wages might be that this would reduce German competitiveness relative to those countries that are outside the eurozone, countries like the United States, Japan, and other non-euro producers of capital goods. So that would tend to impoverish German companies. They might then have to lay off their workers, and in those circumstances they wouldn't really be able to spend more.
But isn't that exactly the crux of the problem of the whole eurozone? Is that if Germany just puts its interest at the forefront, then really, I mean, Greece, Portugal, and all these countries will always be losers, will always lose out.
I am more skeptical about what a boost of domestic demand would mean for Germany and an increase in wages. The vast bulk of the German current account surplus comes from Europe, broadly understood, and the eurozone in particular. Germany runs surpluses with the United States, and it has deficits with Japan and China. It is true. A rebalancing of wages is unlikely to create a massive change in the balance of trade of Germany with the countries of the East. But there's another point to be made here, and it's this, that if Germany is worried about its own competitiveness, if it raises wages and gives people greater ability to consume, then Germany should do something about productivity, because German productivity gains during the last 10 or so years have been very, very weak, very poor. If competitiveness for Germany is an issue, then Germany should look into raising competitiveness by improving technology, improving productivity, rather than keeping wages low for many, many years now.
I mean, we just heard the Greek Prime Minister there speaking of Greece itself raising its own competitiveness. Is that possible? I mean, to raise competitiveness, you need to spend money. That's the one thing the Greeks don't have.
It's very difficult for them to do in a situation where they're constrained in terms of their monetary policy and their exchange rate policy. In a normal situation, one where such constraints were not present.
And that's because they're part of the euro.
They're part of the eurozone, yes. If they were not part of the eurozone, then I think we would see the Greek currency depreciating, and that would boost export demand for Greek goods. And at the same time, they would probably be able to pursue a rather easier monetary policy eventually once the fiscal policy had been put in order, and that would help private sector demand pick up the slack from deficient public sector demand. But those adjustments cannot take place within the eurozone.
So really, in effect, the best thing for Greece to do is to default.
I would agree with the comments that Stephen made about improving competitiveness in Greece. It's extremely difficult right now, and I would go one step further and say that the measures that are being applied at the moment at the behest of the IMF will probably make things worse, because they are
the austerity measures.
The austerity measures, because they are pushing wages further down in an attempt to make competitiveness recover, but they're also creating a very deep recession. And general disruption of the economy, which is likely to have a whole range of negative effects. So in those circumstances, I think defaults, a contraction of the volume of debt that is currently pressing the Greek economy very heavily, seems to me a necessary step if the Greek economy is to recover some of its ability to operate in international markets.
On that note, Stephen Lewis and Kostas Lapavitsas, thank you both for joining me.
When Counting the Cost returns, we take a look at how Thailand's unrest is damaging business and the economy, plus our exclusive interview with Sir Richard Branson, an entrepreneur since he was 15 years old. How did he do it? And how would he do it now? Welcome back to Counting the Cost, your one-stop shop for business and economics here on Al Jazeera. We turn to Thailand, now certainly one of Asia's success stories, but now real fears it could be losing its edge to its rivals. All those deadly battles on the streets of Bangkok and the paralysis of the city's business district have forced many international businesses to start moving out of the country. Step Branson looks at the cleanup.
2 days later, and Bangkok's buildings are still burning. This is what's left of what used to be Bangkok's pride, the second largest shopping center in the whole of Southeast Asia. 500 shops, 21 cinemas and 50 restaurants burned to the ground. According to rough estimates, between $50 billion and $30 billion has been damaged on buildings in Bangkok after the violence. The heart of the pride of Asia is in tatters. Thousands of people have lost their jobs or are being relocated elsewhere. Many people are still working from home because they simply can't go to their offices. The military operation is still going on and the whole city center is being cordoned off by soldiers. Foreign investors have shown satisfaction so far with the military operation, but nobody dares to predict if this is really the end of the violence. Thailand is a major tourist destination here in Asia, and the predictions are very grim. A 20% decline of tourist arrivals and a loss of $40 billion US. But the real picture has yet to emerge of what is already being called one of the darkest days of the Thai history. Step Branson, Al Jazeera, Bangkok.
And have a look at this too, some reaction from businessmen in Thailand who are seeing things evaporate, economically speaking, right in front of them.
Let's say the first quarter of 2010 was one of the best start of the year since the opening of this hotel. And since now, basically a few days, we are running basically 10% occupancy. We are still very fortunate because we are still, how you call it, running a small base, you know, but a lot of my colleagues, over 18 hotels in Bangkok, have closed their doors, you know.
We deal with trade delegations coming in from other countries, particularly Australia, and looking to set up here. And I already know of 4 delegations, so that's business owners from Australia who might be considering setting up here, who've cancelled their trips. We have expat managers and business operators who've relocated their factories and been moved to Shanghai, Vietnam, Kuala Lumpur, other places. Yeah, there is definitely a confidence hit in Thailand right now.
Now, last week we brought you a little snippet of an interview with, frankly, someone who needs very little introduction. Nevertheless, he is Sir Richard Branson, founder and chairman of the Virgin Group, the overall boss of around 200 businesses, $17 billion worth of turnover, 50,000 odd employees across 29 countries. And he was in Doha recently launching a new mobile phone service. We caught up with him for an exclusive interview, not so much about mobile phones, but about what it means to be an entrepreneur.
I don't think that that the rules are any different today than they were, when I left school at 15 and started off. I mean, I think, first of all, I wouldn't, if I wanted to become an entrepreneur or wanted to make money, I most likely would fail. I mean, what you actually need to do is have a passion for something. I mean, when I set off, I left school to launch a magazine to try to campaign against the Vietnamese War, which I thought was, a horribly wrong war, and produced a magazine for young people, which I felt passionate about. The entrepreneurial aspect, I soon realized that being an editor of a magazine, I had to worry about the printing and the paper manufacturing and the distribution. So I had to become an entrepreneur in order for my passion to survive. And I think ever since then, I've never thought, how can I make money in something? I thought, how can I improve the airline industry? How can I create an airline that, people want to fly, something which I can be really proud of? And then, at the end of the day, we get accountants to sort of hopefully add up the money, and hopefully we got more money than costs.
So in other words, don't go in it to make money, but it's a nice byproduct of it as well.
Yeah, I mean, I think that those people who just think, how can I make a lot of money, I think generally fall flat in their face. I mean, you've got to create something that is exceptional. I mean, Al Jazeera is exceptional, and it will succeed because it's exceptional, because it's brave, because it's different, and the same applies to what is a business? A business is somebody who's seen a gap in the market, believes that they can do it much better than other people are doing it, goes in and creates something which is exceptional, and because it's exceptional, therefore, it will succeed.
So, do you believe that spirit is still alive now in young people today? Because, as I said, it's a different world where things are easily available. There's, in some people, an almost expectation that things will come to them, and it's a lot easier, as I say, with the technology around today. Do you think that spirit, that drive to make it happen, is actually still around in people today? Yeah,
I mean, there are certainly people out there with that drive. I mean, but I think, if you've got a hobby, if you have a passion for something, you'll see that other people are not doing it as well, and you'll see how to fill that gap. And there are entrepreneurially minded people who will just feel, I mean, it's screaming out to them. I can do this better than somebody else is doing it, and they'll go and do it, and they'll be very successful at it. And that's why, generally things get, things improve all the time, because there are entrepreneurs out there trying to improve things.
So what's next for Virgin then? You've expanded into 200 odd different areas, so diverse. What are you going to do next? Without giving the game away?
Well, I mean, we've got quite a lot of wonderful projects, but again, they're more passions than, so I didn't think, how can I make a lot of money to go into the space business? I'll go into the space business. Or how can I make a lot of money? I'll go into the, go and explore the depths of the ocean. I mean, what I felt was, I would love to go to space. Nobody else is building a spaceship. Let's see if we can find the best engineer to create, a reusable spaceship that can go into space, that can come back to Earth, that can, make it a space affordable, not just for myself, but for other people. Something we can be really proud of. And, we've had a wonderful last few years, and we're getting quite close now to, next year we'll be, launching our spaceship into space. And, it's tremendously exciting. And then we found a lot of people who want to go to space have said, we'd love to explore the oceans, and there's no submarine that can go down 35,000 feet. So, we're trying to overcome the technological problem of actually you know, and the enormous pressure on a submarine to go all the way down to the bottom of the ocean, but also to be able to see what's going on around you. And
will you know when to stop?
I mean, I'll stop when I drop, basically. So,
the reason I ask is just because, as I say, you've got Virgin on planes, trains, automobiles, cans of cola, mobile phones. Is there a risk that you can go too far and people can go, oh, Branson again?
Every single time that we've launched a new venture, we've always had somebody saying, you know, is this one step too far for Virgin? I think that, you know, the thing is that we're not, you know, most brands specialize in one area. Nike, shoes, Coca-Cola, soft drinks, Microsoft, computers. You know, Virgin is a way of life brand. I mean, you know, it's basically my self-exploring life. I mean, you know, if I, you know, I go to a health club, I find, you know, it's not a very good health club. I'm sure I can do better. So let's go and create, you know, the health club that I would love to go to, and let's make sure we get every single detail right. And you know, and then, you know, if you get it right, it'll be successful, and we can then move on to the next thing. So, you know, I've spent my life creating. You know, I mean, the train service in the UK, it used to be dreadful. You know, we took over the West Coast Main Line. You know, it's now actually, you know, a really good service, something Britain could be proud of. You know, it was a very exciting sort of 7 years of transforming Britain's rail network. You know, aviation before Virgin, you know, set up. You know, there was no seatback videos. You know, we invented the seatback video for aviation, and now people can actually be entertained. We put stand-up bars on board, you know, limousines to and from the plane. Anyway, just getting every little detail right, and it's been a great voyage of fun and creation.
Sir Richard, it's been a pleasure talking to you. Thank you.
Thanks a lot.
Sir Richard Branson there. Now, before we go, check this out. It is a gold Promax BDA award, one of the most prestigious awards in design and on-air branding for television, and it is all ours. Nothing to do with me, I hasten to add. This is all down to Al Jazeera's creative design team, who designed the on-air look for Counting the Cost, things like this, the opening titles, and the graphics, very unique graphics, which we used to simplify the business world for you. The award presented to the team was for Best Program Packaging, the best overall on-air branding design for any one program. So congratulations, and of course our thanks to the Al Jazeera English creative team. Something I can take responsibility for, though, is our website. You get there from the programs link at aljazeera.net/English. We put a weekly blog up there, previous episodes of the show, special web-only content as well. Plus, we're on Twitter, where you can find out what's coming up on next week's show and send us your ideas too. @AJCountingCost is the name to look for on Twitter. But for now, that is it from the award-winning Counting the Cost. I'm Kamal Santamaria from the whole team. Thanks for joining us. See you next time.